Well, hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here is a chart of the market. It's been a while, kind of a relaunch of the Mini Analyst. Long story short, took a few years off to pursue other career ventures and raise my girls who are 7 and 5 now. They're now in school. So definitely have some time to devote to the mini analyst peeps and take advantage of some of these amazing volatility swings that we've seen in the market. So as you can see, or you're going to see, the portfolios, particularly DSC, has been very impressive. We just did a soft launch on April 1st or whatever the first day of the month was. And I think it was April 3rd maybe. And yeah, so we've got some pretty impressive offerings. What's interesting is these offerings that we're going to have for the mini analyst are the same models, methods that we've used for probably at least 10 years, if not 15 years, on some models and methods. So actually, we're just launching with right now the Marty and the doubler right here. So we have the Marty and the doubler, but what happens is the DSC, which is the third portfolio, let me just pull that up real quick actually. Alright, let's see, it is right there. Okay, so there we go. So there's the home page, MiniAnalyst.com. Looks a little different, but it's kind of the same. So we have on the home page, this is the DSC portfolio. We'll talk about that in a second. That's just been amazing. But we do have the MADSC right here, the MA doubler, and the Marty actually. And so we're going to look at all that in a second. But those are three portfolios that we have offering on a kind of a soft launch. And again, of course, the MADSC is essentially going to take advantage of all the methodologies that I myself now trading. Oh wow, May will be 20 years. Wow, oh no. So that'll be 20 years in May, and so that essentially looks at discretion. But let's go ahead and just dive into the market real quick. Let's take a look at this crazy thing. What has been going on with this market? So we actually, at our soft launch, we went ahead and took advantage. We thought about launching here on this big move down to test the 200 SMA and EMA. So, but actually missed that opportunity. Weren't quite ready, but certainly we got a second look. Went ahead and went to bullish, but wow. You know, that's why discretion really is the better part of valor here, because this may not last. Nevertheless, you have to follow your methodologies, and the be-all, end-all of trend following significance is the 200 EMAs and SMAs. So this level of 2600, very significant. 2550 to 2600, this whole band right here. Obviously, we're just doing our second retest. What's interesting is if you go back and look at the 2007-2008 break, it looks very similar to this run-up that we've had here. If we can scroll out a little bit, with this huge run-up in this test, come back up, test, although in 2007 we actually retested essentially what would be tantamount to 2850, and then just rolled over and went down to, like, I don't know, 900. So we could go down pretty markedly here. I mean, look at the froth in this market. It's absolutely ridiculous. So nevertheless, went ahead and went to bullish, so we're bullish for now. Took advantage of this trade in the DSC portfolio. This is actually the DSC portfolio, but the official market timing went to 10:37 a.m. on the 3rd. Okay, so there you go. There you have it. And actually, still in this trade, we can look at this right here. So this is the track record of the entry. Boy, the trading has just been absolutely amazing. So here we had the entry on April 3rd at 25.85. The market closed yesterday on the 10th at 26.55. So that's a gain after some slippage and commissions. It's a gain of $3,500. Now this portfolio is just a $25,000 portfolio. Generally, it'll hold maybe 3 lots overnight if some confluences occur. So, but it's a $25,000 portfolio. It is very aggressive, as you can see, making 55% in less than a month. And of course, you know, that's essentially trading is the 90-10 rule. 90% of your profits are going to be made on 10% of the trading days. This is no this is no exception to that. I mean, this was an incredible run that we've had in the DSC. Looking at 55% as of yesterday, and everything's been closed. So we'll go back and actually look at a few of those gains. So we did that. Still open, still holding for now. Now back to the market, actually. Kind of jumping around here. Obviously, if we get below 25.50, we're going to be looking to go to bearish, not just neutral. We're going to probably switch to a bearish side and definitely look for the market to go markedly lower. I mean, we've had this lower test. I mean, it just really doesn't look good. We've got a pennant formation here that's been broken. The only thing holding it is the be-all, end-all of trend following significance, and once we break that, it's just going to be a free fall. So that's why we want you guys to be positioned well, just like the amazing trading opportunities in 2008, in 2011, in 2015. Just amazing. We'll actually look at, we can look at, well, kind of getting ahead of myself there. And looking at the timer. Oh, interesting. The timer did not start. So this video may go a little long. I did start it, but I don't know. So we did have. So some of the portfolios that we're going to be offering are the Marty, the Doubler, Boost, Crypt, and MANE, MA Select, the HW, and the Venerable from 2001, 2002 system, still S&P system 1.0, still doing amazingly well. It's just absolutely unbelievable how these non-optimized, non-curve fitted, non-back tested, do have a little optimization in terms of looking at market environments, but non-curve fitted models can continue to go untouched for essentially perpetuity. So that's the S&P system 1.0, still running strong, and of course we have the disk and the player to take a look at the markets. But getting ahead of myself. So back to the disk. This, for instance, we can look at this trade right here. This was essentially kind of a boost trade. So looked at the boost trade. The boost has had, this is a very aggressive $50,000 drawdown portfolio, but as you can see, you're going to make quite a bit of money, $500,000. $38,000 is the maximum drawdown close to close, $472,000 in profit. So, but if you can trade around this and beat it, you can make some significant dollars, and that's what occurred in the DSC right around here, going along a couple of contracts in the boost, and go ahead and exiting those right there. Actually, I think the boost was taking a few stop outs, and we went ahead and jumped out here while it was actually going longer. So it's just the methodology is a hybrid, you know, systematic and discretionary to actually beat your systems. That's a winning day, and so we had that gain right there. If we go ahead and look, so that was the EMD swing. $2,375 there, and then we added another contract. Where was that? Where was that? That was a day trade. That was well, where is that? Sell to close this position. No, that was the Russell. Sorry about that. Double. There. Is that it? It looks like it. So we bought another contract at 67 for market order and closed that at 67. That was it. That was a day trade. Oh, where was that? Where was that swing trade? You all definitely don't have the time to oh, here it is. Oh, here it is. Where? Okay. So there we go. So that was just simple trade recommendations. 952 new trade recommendation, buy at 48.50, at another contract 37.80. That was at 9:35 a.m. on Wednesday, and then on 4/4 4/4 the same day, after a huge move higher, go ahead and close both the positions, as you can see. So close that position for $2,300 and $1,300. Just amazing moves that we've seen. Then we went ahead and jumped into a crypt position. So here we have the crypt. This trades the Russell, and went ahead and jumped into a position, kind of traded around it, and boom, jumped out early. There was another gain of, let's see, the crypt was an RTY. Oh, there you go, $1,175. So, very impressive. And what's more impressive are these day trades. Well, equally as impressive. So we take the day trades and we trade around, let's say the doubler. For instance, right here was a trade. The doubler actually ended up losing, but we went ahead and jumped in here, jumped out there. Doublers had some pretty impressive trades overall. We can take a look right here. 170,000 against a maximum drawdown of $7,000. That's just almost unbelievable. And then of course we'll take a look at the Marty right here. 171,000, twice the drawdown. You're going to pay a little bit less for this. I think this is, now of course this trades up to 3 contracts, or it trades 3 contracts, up to 3 contracts, and this portfolio generally would be $100 a month per contract, so $300 a month. We're going to have some specials, some soft launch specials that are going to be going on for a quarter. You can basically get it for that for a quarter. I think this is like $297 a quarter. So you're basically like 70% off as an introductory savings, kind of a soft launch kind of a deal. And then of course the doubler trades up to 3 contracts as well, but you're getting significantly better performance, particularly with regard to the maximum drawdown. So we're looking at again 3 contracts. I think that's just $497 actually. So if we go in and look at the doubler, we're going to get back to the market in a second. Yeah, $497 a quarter, a quarter. I mean, that's just almost unbelievable. $167 a month to trade 3 contracts. Non-optimized, non-covered, been going for decades. Well, at least a decade. So there's the this was actually the performance of the disc. Some of these trades just the other day. We'll go back and look at those right here. So those are some swings. Those are some swings. We had a beautiful trade on the Nadex, taking some binary options on one of these. On actually, it was this big day higher here, so that was impressive. But these are the discretionary trades, and you can see right there, bought there, trading off of the. These are trading off of the probably the doubler, actually, just booking some profits, booking some gains. So what happens when you have that? When you can introduce discretion into your systems, and you get performances like this. This is as of yesterday, the 10th, and we've had no new trades today on the 11th. Today's Wednesday, April the 11th, 2018, and we're looking at returns of about 55%, $14,000. This portfolio right here is just $697 a quarter for now. $697 MADSC. Subscribe now. $697 a quarter for that. It's made $12,000 in the last couple of weeks, or since April. Now, having said that, again, you can't expect that every 2 weeks. 50% is actually pretty good. It's okay, I guess, for a year. You know, we target 100% real returns over the course of a year. We've been up 55% in the last couple of weeks, just as in the introductory soft launch. So take that for what it's worth. But as far as the intraday, we're going to look at the player. Yeah, just a quiet day. Really no trades going on. Bullish, a little choppy, bullish yesterday, but it was kind of an interesting day. In fact, if we look at the pulled out some gains in the doubler. The Marty actually pulled out some gains yesterday, so that's interesting. We're going to take a chart, look at the Intraday, so there's the 5-minute. Again, just a very quiet day in the S&P 500 futures. And we're going to look at the, wow, look at this weekly. Very impressive. So we're looking at the daily. So like we said, right now we're bullish, kind of in a neutral zone. That's why we went ahead and exited any kind of boost or crypto exposure and for gains, because we're definitely looking for this to roll over, unfortunately. Our time frame is more these blue lines. So this is market resistance at 2,700, and right now we're just kind of chop around. May come down here to 2,600, may jump up to 2,700. The moves we've seen obviously have been historical and impressive. Okay, so we want to take a look at the current open positions. We've got the HW $6,000. That's obviously sitting on the biggest gains. It's a long term swing position. And we've got the crypt sitting on almost $7,000 in gains in just a few days. Of course, that's on 4 contracts on margin of about $4,000, maybe $4,500 or so. So about $18,000 essentially in margin there. That's probably a $25,000 portfolio. Actually, we didn't look at that kind of stuff. We'll go ahead and touch on that as well. But the Boost sitting on a nice little gain, $1,700 per contract, and the SP System 1.0 right around the flat zone. And so we're gonna, this is the end of the trading day on the 11th, and we'll be back to do some intraday analysis and some more daily analysis. But right now we're essentially bullish, technically bullish, but as you can see, discretionarily it may start to roll over. And so let's go ahead and just pull up some of those other things. If we look at some of the, what were we going to look at? We were going to see the starting capital for is $25,000 for crypt. Trades 2 lots, 2 contracts. Actually holds 4, up to 4, trades 2 at a time. 25, yeah, so $25,000 portfolio. That's what I thought. Now, the MANE and Marty, the crypt, Doubler, HW, there's the market close, and Boost, nothing's exiting today. Like I said, it was a very quiet day. System 1.0 can be combined. So you can trade any of these, $100 a month per contract. That's a regular price. And you can trade any of these or all of these together in a $100,000 MAP MiniAnalyst Platinum portfolio. So if you take all of these and you combine them, you get the Platinum portfolio. So if we look at setup, by the way, we don't do any ever position sizing or compounding. You can certainly do that. You can certainly add portfolios, and there you go. So if you combine the HW, the Doubler, Boost, Crypt, and it can be non-optimized, non-curve fitted, non-back tested, a little bit of optimization, but no curve fitting or back testing, or a little bit of back testing and no optimization. Anything would be walk forward, certainly. If you don't make money, we don't make money. And the System 1.0 and the Select. So if you do that, you get this. The be-all, end-all. $1.5 million of profit over 10 years, essentially. In fact, if we look at the results, you see, there we go, return tables. $58,000 so far this year for all these are the best of the best trading models. $58,000, $161,000 last year, the $200,000. Let me state, these are hypothetical trades. They're not back tested, they're not curve fitted, they're likely to perform in perpetuity, but we can't say that. We have to say past performance is certainly no indication of future results, as a disclaimer. And certainly this is to only be used with risk capital. 10 to 20% of your portfolio is to be dedicated to what we do. And of course, in 2008, when everyone's 401ks turned into 201ks, let's say you had $1 million, you gave us $200,000. A lot of our clients made 300, 400, 500% that year. and their 401k stayed whole, we're definitely seeing something like that coming. If anything, just indicative of the volatility that we've seen either way. In fact, look, in 2009, 131,000. So here you go. All the way back to 2003. Now, a lot of this stuff only goes back about 10 years, but some stuff does go back that long. I guess that's it. So we're going to look at for a link to the Platinum portfolio, we would have to go back over here, and right there to the Platinum. We can refresh that actually. There we go. Platinum portfolio, that's essentially all of the things we've talked about in one. And of course here you have the performance, $1.5 million, $50,000 maximum drawdown. You're making quite a bit of money per year. Again, hypothetical trades. Here's the disclaimer: everything is hypothetical, and although non-curve fitted, non-optimized, and these systems have been running live and traded for over 10 years. There you have it. If you'd like to subscribe to that, you can actually email us for a link for now, but that'll be $19.97 a quarter. That's just over $500 a month, essentially. That's not that's pretty impressive. So if you're looking, for instance, at the performances, you're getting, that's $8,000 a year on, so far, $58,000 in profit this year. $150,000 is at $200,000, and $8,000 a year in fees. That's a bargain, folks. So we will hope you enjoyed the video, and we'll see you at the next, or you will hear us at the next video. Have a great day.